Hello there, I hope that you're doing well. Welcome to this new trade breakdown lecture. The trade breakdown lecture which you're going to watch is going to be on manipulation and distribution. Throughout the upcoming trade breakdown lectures, I will try to combine the style of a trade breakdown lecture with a topical lecture. This means that every single trade breakdown lecture will be centered around one specific topic so that you're able to truly learn the ins and outs of that topic. This lecture is going to be on manipulation and distribution. Recognize the manipulation so that we can look for the distribution for the opportunities. With that being said, let us begin with this lecture. First of all, we are going to take a look at the following two schematics. These schematics represent the purge and revert as I've been teaching it to you with regards to my time cycles logic. My time cycles logic is applicable across all time cycles, and that means from the highest possible or biggest possible cycles, such as weekly, daily, or even session cycles, down to the smaller cycles such as the 30 and 10-minute cycles, of course. When I look at these schematics, I want you to pay attention to the following. I'm about to hover over these schematics and I want you to truly pay attention to in what order I'm explaining what I'm explaining to you. As you can see right here, you can see my big yellow cursor. This big yellow cursor is going to hover over the schematics and I'm going to walk you through the logic behind why these schematics work and why they play out. What I need you to see is that on the left right here, we can see that the market opens up and this horizontal line represents the open of a new time cycle. This can be any time cycle of your choosing. The underlying narrative is that we are going to see higher prices for the day or session, or maybe even week. And therefore, we are looking for the market to open, drop lower to take out the previous cycle's low, because below that low, a lot of sell-side liquidity is engineered. We need this sell-side liquidity in order to fill our long positions. That is the internal dialogue of smart money, meaning IPTA is repricing lower to go higher. The moment that price displaces back above the previous cycle low and above the opening of the current time cycle, that right there shares to you that we are likely going to see the market begin to draw towards this green line, which represents the previous cycle high. The previous cycle high being a very important buy-side liquidity pool. Now, when we pay attention to the schematic on the right here, you can see that's exactly the schematic on the left, but then inversed, where you can see that the market opens up for this new time cycle. It runs up higher to take out buy-side liquidity engineered above the previous cycle high. And we then begin to see the signs of the market wanting to turn around and roll over. What is occurring right here is that during this repricing higher, short orders are being filled. And these short orders are being filled because buy-side liquidity is being taken out. And at the same time, a lot of buyers are being trapped into long positions. So that is the counterparty which we require in order to fill our short orders. And what we then begin to see is that the market begins to roll over and it displaces below that previous cycle's high buy-side liquidity pool price level. Notice that we displace below the opening price right here, and that right there shows to you that the time is likely now right for the market to expand towards the downside to draw towards the sell-side liquidity pool. The reason why this sell-side liquidity pool is so important is because we are anticipating lower prices for the session or day or even week to come. And that is where narrative comes in play. What I need you to pay attention to within these schematics is what I've just annotated with these red boxes. What I need you to pay attention to is this red box within the bullish example and this red box within the bearish examples. What you can see is that these red boxes represent the manipulation which takes place after the open has occurred. Meaning, after the open of the new time cycle, manipulation against our bias is occurring. Where on the left, I outlined to you that we were anticipating higher prices, but we see the market drop suddenly. On the right, you can see that I was anticipating lower prices, but we see the market run up higher quickly. Put emphasis on the word quickly. What you can see is that on the left, we are seeing open low taking place. And on the right, we are seeing open high. And you might be wondering, open, lower, open, high of what? Of this new time cycle which is opening up. And how price is being delivered around this opening price is crucial when it comes to anticipating what's likely going to happen next. Because when we see manipulation lower against our bullish bias, it's exactly what we're looking for. Because we know that the majority of traders are going to misinterpret that. Just like the majority of traders are going to misinterpret this, run higher, whilst the underlying order flow is bearish. They will look at this as signs of strength, but you should look at this as manipulation. Now, where in your protocol should this logic of time cycles and these specific open lows or open highs be implemented? If you watch the 2024 model series, which you highly should before continuing watching this trade breakdown lecture, this traders breakdown lecture is by no means meant for a newer student. This traders breakdown lecture is meant for the student who already has at least experience with the model as taught within the 2024 model series, because what I'm describing to you here is an advanced way of looking at manipulation. We recognize this manipulation inside of this step right here, where we are looking at the point of interest. Within these boxes, you can see that steps are being shown of the trading protocol as I've taught it to you. The point of interest is very important because the point of interest is the level where we're anticipating a reversal to originate from. Here you can see that I've written out how. Let me explain. How the point of interest gets traded into tells you the story for what's about to happen, likely next. Because we are looking for a certain form of manipulation to occur into our point of interest, because that is telling to us that distribution is likely going to follow next. When you recognize manipulation, the distribution can be anticipated next. So how price trades into our point of interest is crucial. And that is where the logic which I've just described to you should be implemented within your trading protocol. Pay attention to the point of interest and how price is trading into it. When we pay attention to an example of this then, what you can see on the right here is that you can see a market which is expanding towards the upside. Next to that, you can see that I've annotated the high of this down close candle with this very long wick and the low of this candle. Notice that on the left, I have also shown the schematic of the bullish purge and revert, where we purge the previous cycle low and revert towards the previous cycle high. What I want you to understand is that on the right here, you are looking at an RE chart of Nasdaq. Notice that this new candle opened up, went lower, took out sell-side liquidity resting below this low, and then began a reversal to draw towards the upside. Notice that we come in very close proximity to this candle's high, but notice that the market stops right in advance of it. The chart here on the right is the RE chart of Nasdaq, and what I want you to see is that this candle opened low and then began expanding towards the upside. And even though I do not use RE candles as purge and revert models or anything along those lines, the RE chart shows to you specific opens, and the most important opens to monitor on the RE chart are the following. For the morning session, I'm looking at the 7 o'clock, the 7 a.m. opening. I'm looking at the 10 o'clock opening, and I am looking at the 1 p.m. opening. And the reason why I'm paying attention to these specific openings on the RE chart is because these openings are the openings of the 90-minute cycles. Therefore, I'm paying attention to, all right, how is price going to open up for this new cycle? And if we drop into the lower time frames in a bit, it will clear up to you. But before we do that, I'm going to teach you a way of being able to recognize an expansion taking place before it occurs. Meaning, I'm going to teach you a way of looking at the markets through a certain perspective to confirm distribution about to arrive before it even occurs. In order to do so, we will pay attention to intermarket relationship. On the left right here, you can see Nasdaq, and on the right you can see ES. Notice that I've annotated the high and low of this down close candle with this long wick on Nasdaq, and next to that I have annotated the high and low of the same time right here on ES. Notice that when the 10 o'clock open took place, Nasdaq took out this previous candle's low. When we, however, pay attention to the 10 o'clock open on ES, you will see that ES never took out that low. That right there is SMT, guys. That right there is a cracker correlation relative to this candle's low. And that is telling to you that we're likely going to see an expansion higher taking place soon. So when we pay attention to this same chart again, but now through the lens of this RE imbalance which I've annotated, you begin to understand why there was IOFET which occurred, why institutional order flow entry occurred, why we saw the market just step into this BC and then begin expanding right away afterwards. It's because the market is in a rush to reprice towards specific buy-side liquidity pool objectives. Now, I can already hear you say, all right, Zeus, this is all fun, but how can we apply this information? How can we use this in a real-time environment? Well, what you need to establish is the following. You need to know that this is the point of interest from which IPDA is going to reprice higher. Meaning, we don't look for any long opportunities in advance of that point of interest being reached at the right time and in the right way. Yep, you heard that right. It's not just at the right time, it's in the right way that the point of interest has to get reached. Yep, 2025 is going to be so fun, guys. You're going to learn so many new things that you're going to be like, how the hell did I not see this prior? It's all hidden in plain sight. It's right in front of you. All you need to do is pay attention to details and you need to investigate and listen closely to the sequence in which I'm explaining this to you. Because once you see this, you can never unsee it. Meaning, what we do is we literally place an alert at this candle's low. And until that low gets taken out, we don't care. We're not even looking at the markets. We're just waiting. We're just waiting. But when that low gets taken out, that is when we begin to hunt because we understand that the market is drawn towards the upside. Does the market need to reach this buy-side liquidity pool in order for us to find a profitable trade? Absolutely not. All we need to know is that this REBC is going to get utilized to reprice higher. It's going to get utilized to send the market towards the upside. And that is the drawing liquidity above market price, which we have established. Now, if we drop into the 1 minute chart, here you can see that I have added lipstick onto this 1 minute chart. And next to that, you can see my executions for this day. What I will do is I will walk you through this delivery. And we will begin with our time of interest as outlined within the 2024 model series. Within the 2024 model series, I taught you to pay attention to the 9:30 open until 10:30. Ideally, we would like to see our smart money reversal for the morning session form during this window of time. That's a 1 hour time window. What I want you to see is that from 9:30, we see the market open high and it then suddenly drops towards the downside. Notice how quickly it expands towards the downside. Notice that a CB gets created here that the market never retraced into before continuing its expansion lower. We see the market expand and towards 9:45, the beginning of our macro from 9:45 to 10:15, we begin to see the market consolidate. It's going back and forth, back and forth, back and forth. 10 o'clock comes along. What does 10 o'clock do? This is the open of that RE candle, which I've been outlining to you in the previous slides. Notice that from 10 o'clock, the market opens and immediately begins to run higher. It immediately begins to draw towards the upside, so to say. Is the smart money reversal, however, already in? No, because 10 o'clock opened and only went higher. It didn't take out any sell-side liquidity for this new 90-minute cycle. Therefore, what we're waiting for is we're waiting for the market to drop below the 10 o'clock open and to trade into that REBC. That REBC's high is annotated by this low. This low is our previous 30-minute cycle low. Notice that this low is the low of 9:30 to 10 a.m. Hello, do you see how I'm combining the use of a higher time frame array with time here? I'm utilizing 30-minute cycles and the understanding of that higher time frame array to confirm that this sudden drop lower, sudden drop right here, is literally manipulation which is occurring. From this moment in time, when I see this sudden drop towards the downside and I see these CBs get created, that right there is IPDA basically showcasing its hand to me. It's literally telling to me, all right, we're going to distribute higher soon. Because what they're actually doing is the following. They're trapping retail money traders into believing, all right, we're gonna reprice lower for the remainder of the day. It's time to dump. It's time for the markets to be in a rush to go lower. So what is occurring is they create that narrative by these big down close candles, and they begin to see the market draw lower. So what does everyone think? Everyone thinks, all right, it's time to go market short. We just need to be a part of this move. They place their stop losses above all of these highs right here. And that's the engineering of buy-side liquidity which is taking place. At the same time, this sudden drop lower also has another function. And that's the following. This sudden drop lower has the function of drawing towards the stop losses of early buyers of this move higher. Because there were people that went long inside of this small run higher already. They placed their stop losses below these lows. And that's the engineering of sell side which occurred. So there are two functions that are taking place right here. And I hope that you're taking notes of what I'm describing to you, because this is a very important paradigm to have when it comes to manipulation. Notice that the market stops right in advance of that REBC's high, right here. And we see a retracement taking place. Man, oh man, when we see this, oh boy, that is time. And the reason why is because what is occurring is that they're engineering sell-side liquidity one more time. What will people think when they see these relatively equal lows get created? They will think to themselves, oh, strong support is being found, right? The market is having a hard time with displacing through the support range. Therefore, we can go market long and place our stop losses below these relatively equal lows. That's their thought process. What occurs? Nasdaq retraces, and we then begin to see the market drop suddenly one more time with these three down close candles right here. We trade into the REBC's high. We take out that previous 30-minute cycle low when near the end of the new 30-minute cycle right here, and we begin to see the signs of a smart money reversal forming. From this moment in time that you begin to see the market displace higher with this big green candle and the big green candle afterwards, and price trades above this candle's open, the open of the first down close candle in the sequence of down close candles, you know that the change in the state of delivery has just taken place. And what that means is the following. What that means is that where IPDA was initially repricing lower since the 9:30 open, it's now going to seek to draw towards buy-side liquidity and draw higher next. When? Guys, from 10:30 on, from the open of that new 30-minute cycle. I haven't annotated the open price of that 30-minute cycle, but if you would annotate that, you will see that we open low into this BC, into the bullish order book, and begin expanding higher. Notice that the market reprices above this sequence of imbalances right here, and these are true inversions for value gaps. These CBs should function as support on price moving forward. Notice that we begin to see this BC get created when the market expands outside of that price range of those inversions for value gaps. We see the market retrace into that. And during this retracement, you can see that I'm pyramiding into my position. But notice that the market closes below that BC. Does that mean that all of a sudden we're going to look for lower prices now? No, because what is the underlying narrative? The underlying narrative is that we dropped lower to go higher, right? That's the thought process. Therefore, I'm looking at this drop lower as manipulation. Take out sell-side liquidity resting below this low, and that allows me to pyramid once more. This is where a lot of retail-minded traders that trade based upon so-called smart money concepts would fall into the trap of shorting this so-called inversion value gap. They are chasing price patterns. Are you beginning to realize that? Guys, what I'm explaining to you, yes, literally goes so much deeper than just price patterns. It's time and price. The moment that price crossed this bullish order book, it's open, and that bullish order block got validated, from that moment in time, yes, listen closely, from that moment in time, IPDA was in a buy program. And that right there shares with you, all right, every single expansion higher followed by a retracement is a buying opportunity. Notice that the market displaces back above this BC right here and a new BC gets created. Isn't it interesting to see how many imbalances are forming all in each other in this area? It's almost as if these imbalances are meant to form right here. Notice that the market retraces into that bullish fair value gap and into that sequence of imbalances, and that's another entry opportunity. Notice how I keep on pyramiding because the market is drawn towards this CB and the 930 open. We see the market expand higher and it displaces above this candle's high. Notice that I've annotated this full candle. Notice that when the market traded above that candle's high, a BC formed. That right there is a key algorithmic signature that tells you, all right, we're going to continue drawing higher. When the market retraces into that BC, it's again an entry opportunity. And the reason why is because this is your previous 30-minute cycle high. And this is your previous time cycle high. And in order for continuation higher to take place, what you need to see occur is that when that previous cycle high gets taken out, it should function as support and price. Yep. I have shown to you the purge and revert schematics, but if you go to the mentorship form and you look at the sticker pack, you will also see the continuation schematics which we have created for you. Notice that the market consolidates at the high of that previous 30-minute cycle, and we then eventually see the market expand higher, drawing towards that CB, and that right there is a big partial for me. I wanted to see the market trade towards the 930 open as well, but due to the fact that there was SMT with ES on the highs already, the market was not ready to do so. So when the market eventually closed below this CB and we really saw the signs of bearishness stepping in, I closed another big part of my position. Now, what I want you to take away from everything which I've just broken down to you, and I truly hope that you as a newer student did not watch all the way to this part. I truly hope that only advanced students are watching until this now. Because I know that the newer student is probably like listening to me and they're like, what is this guy on about? What is he speaking about? Yep. I wanted to make this trade breakdown lecture on the topic of manipulation and distribution because it is one of the most important things to understand. And the reason why it is so important to understand is because if you cannot recognize manipulation, you are going to be the one that's going to suffer from the consequences of being manipulated. And you might be like, damn, these market makers, they're out to hunt my stops, right? They're out there to hunt me, my stop losses. They're looking for me. That's the thought process that some of you might have and that the majority of a lot of retail mind traders have. Here comes the thing. These market makers don't give a shit about where your stop loss is. They really don't. They really don't care. Because all they're doing is they're delivering price in an efficient manner within specific time cycles, within specific windows of time. This right here is consolidation. And that consolidation is basically engineering liquidity in the form of sell stops below these relative weak lows, as you know. But here comes the thing. What you need to recognize is that at the same time, buy-side liquidity is being engineered on the highs right here. So what will occur is that one sudden drop will take place, one big manipulation run will take place to take out all of the sell-side liquidity. And when you can recognize that, and you can recognize when that will end, that manipulation, think of SMT. Remember what I outlined on the RE charts. Nasdaq took out this low whilst ES didn't. That is SMT, guys. The manipulation is over and now it's time for the market to begin drawing towards the upside. This right here is beautiful bullish order flow, and I truly hope that you are going to investigate what I outlined to you. And you might be looking at this open right here and you might think to yourself, but we opened and initially went higher, right? Yep, that's correct. But notice that for the full RE candle from 10 to 11, or for the full 90-minute cycle from 10 to 11:30, right here, you can see that we went lower within the first 30 minutes. Meaning within the first 30 minutes of trading, the low formed below the cycle open of 10 o'clock right here, inside of a point of interest. Are you beginning to connect the dots? You do not need to see the open and immediately drop lower in order for it to be open low. As long as price drops lower after the open and there's still enough time for the remainder of the time cycle to play out and for IPTA to deliver, you have open low, guys. And that right there is something which is going to take some time for you for it to click. Because when you pay attention to this 930 open, you clearly see 930 open, high, drops lower. Yes? So you can easily see, yep, we went open, high, and then went lower. But here you can see that there's more time required for that open low to occur. Because the market initially had to run higher, engineer new buy liquidity above these highs, then manipulate lower so that distribution could follow afterwards. But this is still labeled as open low because we dropped below the opening price, whereas initially we didn't. And this is when the time was right for IPTA to begin expanding higher. So with that being said, this trade breakdown comes to an end. I hope that you found it insightful. If you are a newer student and you watch this breakdown all the way to the end, you're probably like experiencing a headache or something, or your mind is all over the place. And that's a good feeling because it shows that you're thinking deeply about what I described to you. Now, before we end this breakdown, there's one more thing which I want you to look at. And that is, I would say, undeniable algorithmic precision based upon time. When you pay attention to the sell side of the curve right here, and you begin paying attention to from the 930 open till 1030, you can see that until 1027, when this low formed, the market was drawn lower. From 1027 on, we saw the market displace higher and a buy program unfolded. Notice that when I, however, extend 1 hour more to the right and I put a vertical line at 1130, which is right here. Notice that 1130 is right here. I don't have a vertical line on my chart, but I want you to visualize it here. When I put that vertical line here, you can see that the buy program lasted nearly until 1130 after 1030. Must be random, right? That the sell side of the curve and the buy side of the curve come in close proximity to each other when it comes to their duration. This isn't always the case. It's not like it's always going to be precise, but this is, however, something which you can look into and which you can log within your data collection, where you can log how long it takes for the sell and buy side of the curve within market maker models to unfold. And that's a very interesting investigation to do. Time-based partials are a good idea to look into. So with that being said, I want to thank you for watching this lecture all the way to the end, and way more topical lectures will come. And this topic is going to be further discussed within the 2025 model series, which I will share within the upcoming months. Be safe.